Good morning, everyone. So once again, I'd like to thank PEMNA for giving us the opportunity to present the experience of the Republic of the Philippines when it comes to implementing accrual-based accounting. Of course, since I'm pretty much the only one in the way of your lunch, I will try to make this short and concise as much as possible. So to begin, I think just a brief background. So the key facts about implementing any accounting standards for the Philippines. So number one, there is one supreme state audit institution called the Commission on Audit, and they cover the national government, local government units, state-owned enterprises, universities, public universities, and colleges. So this is in marked contrast with the experience of Korea shown earlier, where there are different agencies for different coverages. They use the document, their Bible, so to speak, is called the Government Accounting Manual, which was took effect about more than 6 years ago, actually 7 years ago for that matter, on January 1, 2016. It contains specific guidelines, procedures, and of course the accounting policies that will govern how every public sector unit will record their own transactions and their own basically financial transactions. And of course, the GAM, the Government Accounting Manual, embodies or tries to embody as much as possible the the single standard in the Philippines called the Philippine Public Sector Accounting Standard. So once again, there is only one standard that will cover everyone, every unit in the public sector of the country. Now, okay, and because there's only one state audit institution, you will see here that's going to, that is reflected in the path that we took when it comes to implementing accrual-based accounting. So number one, the first step really in our journey was the unification, or basically the streamlining and the rationalization of the chart of accounts, this one for national government agencies, because prior to January 30, for the longest time, you have different national government agencies in the Philippines doing their own thing. They have their own standards, and you can just imagine how difficult it is to properly consolidate, to properly reconcile, and to properly audit. So that's the first step. The following year, the Commission on Audit issued a resolution basically forcing or mandating the adoption of the Philippine Public Sector Accounting Standard, which is, in the terms of Dimitri, an indirect adoption of the IPSAS, the International Public Sector Accounting Standard. So again, this is a mandate issued by the Supreme State institution, and everybody was, had no choice but to comply. Of course, it's one thing to instruct everyone to adopt the new standard, but it's another thing for them to properly implement those standards. So that is why, after more than a year of difficulties in the transition for each agencies, the commission issued what I said earlier, the Government Accounting Manual, a more detailed document that embodies again the new standards. Of course, the challenge is that even with this new manual, implementing agencies, from every step of the, from all sectors, parts of the public sector are still struggling. So there's still room for improvement, and most of the annual audit examination conducted by the Commission is actually dedicated towards identifying errors and therefore opportunities for improvement to ensure that agencies now properly comply with the standard. And this process is ongoing until this day. So that is a decade full worth of the trial and error, so to speak, for the implementation of accrual-based accounting. And of course, with the new standard, the system took time to implement. So it was in July 2017, a new national government accounting system, which adopts the new framework, the new standards, and the new chart of accounts. And this one, a new unified accounting chart of accounts for everyone, not just the national government. And today, I think the challenge here, without the IFMIS, without any integrated financial management system, we are going to rely upon the existing systems within the Treasury and, of course, the various government sectors. And the critical part is basically interoperability and the information sharing. So that is the key priorities right now when it comes to IT development. So that's a journey. Now, in terms of the specifics of the implementation, basically these are the major items that were affected. So in terms of income, we have to make some adjustments for interest earnings, specifically the bank deposits that every agency has one way or another. Service income for the specific activities, services rendered by specific implementing agencies and even the local government units. Rent for the properties, being rented out by these public sector entity. And of course, dividends. This one for the national government because of its ownership of the so many state-owned enterprises. You have also, of course, adjustments to be made in the expenditure side of the balance sheet. So number one is, of course, your interest expense, just the flip side of the interest earnings. Commitment charges, particularly for official development assistance loans for your multilateral partners. They require payment of commitment charges prior to the release of any loans, and that has to be accrued properly. And for most of the government agencies, any expenditure for goods and services delivered but not yet paid. So there is an adjustment for such activities. And of course, for the national government, for the Treasury, debt service items. Again, interest earnings, interest expense, commitment charges, and something new, maybe something unfamiliar, premium discount for reissued government securities. And just a brief background. So anytime there is a difference between the coupon rate and the yield, the market yield of any government securities, it's either we get more money from any reissuances or we get less money from any reissuances. So the differential has to be accounted for, and we account for that using accrual-based principles. Now, in terms of implementation, because we do not have the comprehensive IFMIS, accrual entries are generated at the end of each fiscal year. So even if we have quarterly financial statements and maybe even monthly financial statements, there are at least within a year, there are no accrual adjustments yet. It is only after the year when when expenditures, revenues start crossing fiscal years that we are going to generate the necessary accrual entries. And the reason for that is because anything more frequent is very much not feasible right now, given constraints on manpower, again, the IT systems, and more importantly, the information availability. Demanding, let's say, a monthly accrual adjustment means, is extremely taxing on everyone, even the units, responsible for generating the specific activities that where you get the necessary information from. And finally, there is really no incentive, at least right now, to generate a more frequent accrual adjustment because audits are performed on an annual basis. Now, here it is just the table just shows some of the examples of the accrual implementation. And the thing I'd like to point out here is that implementing accrual basis accounting simply means increasing, it's almost always an increase over the baseline cash basis accounting. Not always the case, but almost always the case. And that's important, as you will see later. So here, accrual adjustments for interest income, expense, and the commitment fees entail adjusting upwards the proper values relative to their cash basis values. So here are some of the last column shows the specific accounting entries. Now, where are we? Okay. So another one of the things I'd like to also highlight when it comes to the implementation of our implementation of accrual-based accounting is that similar again to the Korean experience, we have separate principles when it comes to preparing the financial statements and the budget, or what we call the fiscal accounting reports. So again, financial statements, like the Koreans, we adopt the accrual principle. But for the fiscal reports, we use the cash-based accounting. So again, I guess the challenge really is to, earlier Ian showed a nice Venn diagram. So I guess the main challenge here is making the Venn diagram, that intersection between the two, much, much larger. But in any case, going back here, financial statements, and this difference is critical because financial statements are consumed by your auditors. It's you prepare these primarily as a compliance to your state auditors, to your commission on audit, while the fiscal reports are used by everyone, your policymakers, your investors, your creditors, and in general the public themselves. So because the audience, and therefore the primacy of the fiscal accounts when it comes to the appreciation of everyone, it impacts in a tangible way government actions and decision making. Example of these are as follows. So first, we actually, depending on the fiscal constraints, the fiscal position, we actually defer. Not the government actually sometimes defer actual cash disbursements for the next fiscal year. I mean, if we do accrual principles, such behaviors does not make any sense because one way or another, you have already recognized it, the expenditure. But here, for cash basis, the timing matters. The timing matters for your fiscal reports. The timing matters for even your budget utilization. The second is that another example is in terms of our debt issuance. So there is an incentive, of course, subject to, market conditions, but there's in general an incentive to issue your debt in the second half of the year, especially if you issue, semi-annual, coupon bearing government securities. Why? Because if you issue, let's say you issue government securities on April, then the first interest payment of that one will fall around October of the same fiscal year, and that will be reported in the fiscal accounts. That will increase the fiscal deficit within the fiscal year. Now, contrast, if you do make such a borrowing decision, let's say in July, then you will not recognize the interest expense within that same fiscal period. That fiscal savings can therefore be used for other priority programs. So it matters, that difference in a tangible way. And of course, the main challenge really in, again, increasing the Venn diagram, so to speak, is that it's really difficult to generate accrual estimates for your major revenue items, including tax revenues and your customs duties, for example. Why? Number one, you don't know, at the very least, even the revenue collecting agencies themselves do not know, or it is for them very uncertain when they're going to receive the payments and even the size of their inflow. So they have their own targets, but as we know, targets are meant to be broken one way or another. So, and of course, there is no easy or straightforward documentary basis to generate those accrual estimates. Unlike, let's say, your accounts payable for delivered goods and services, you have a contract, you have a completed, delivery report, so you can already generate the accrual estimates. You know that you have incurred the obligation. But how do you do it for, let's say, income tax payments? You don't know when the people are going to start paying their own taxes. You do not know yet how much they're going to pay because, they're still filing their income taxes. So all of those difficulties are important, because if we try to adopt accrual-based principles in your fiscal reporting, what will actually happen is that your fiscal deficits will simply be overstated. You can do accrual for your expenditures, but since you're not doing your the same for your revenue accounts, the expenditure part of the fiscal deficit will start ballooning, and that is going to very much hurt almost every aspect of the macroeconomic stability. So those are some of the key challenges I'd like to highlight. And some of the, so having said that, some of the lessons learned we have when it comes to, at least implementing the accrual-based principles in financial accounting reporting. So first, there really is a need to continue these reforms. So it is, again, a very difficult adjustment to go from cash-based to accrual-based. So, I mean, if there's going to be a disruption or, a reversion, then that would be another set of difficulties. And of course, if there's going to be another reversal from cash-based to accrual after such an backtracking, then again, it would be difficult. So basically, clear vision and the continuity. And of course, have to continue improving the skill sets of your workforce, and more importantly, manage the change manage processes. So this is really the most difficult part when it comes to adopting accrual principles: the adjustments necessary, the immense informational burden being demanded by everyone here, and of course, proactive risk management, because what we have seen in a lot of accrual implementations that there are a lot of double entries, or some expenditures are being recognized twice because sometimes they forget to close down their accrual entries, so those sorts of specific things. So proactive risk management to ensure that those incidents are minimized. And related to that is, of course, those controls. The controls necessary to make sure the errors are minimized in the first place. And of course, lastly, the important part is without the if-miss, you have to find a way to properly integrate the existing accounting systems with the other systems within the bureaucracy, because implementing accrual-based accounting is really informationally demanding. And the easier, the more convenient, the faster such information is conveyed, then the smoother any implementation will be. So that would be my final slide. And again, thank you very much.